Hey everybody, welcome to Mortgage Today for Thursday, November 9th, 2023, and oh, what a day it was. UMBS were down 6 basis points bright and early this morning with just pretty much flat. Stocks were flat as well, with S&P futures up 3.5 points. Bonds were weaker in the overnight session, as was the case on Tuesday. Treasuries were highly correlated with EU yields, but this time around it wasn't with an obvious eye on the underlying data. If we're looking for motivation, the shape of the yield curve could be the simplest explanation. Even yesterday afternoon, we were concerned about the pace of the correction of the curve. Correlation isn't necessarily causality, but most of the overnight weakness was a function of curve steepening. We got jobless claims today, which came in at 217,000 on a 218 forecast. It was 220,000 previously. Continuing claims came in at 1.834 million on a 1.820 million forecast. It was 1.812 million previously. We also got news that Wells Fargo is seeing some cracks emerging in the U.S. economy, and they are forecasting a recession in 2024. The 10-year auction went off yesterday without much of a hitch. The bid-to-cover ratio was 2.45, and yields fell a touch after the results. The Fed futures now see a less than 10% chance of a rate hike in December and an 18% chance of a cut in the March meeting. There is some evidence of disinflation going on in used cars. The Manheim Index of used car prices fell 2.3% in October. Autos have been a key component of inflation over the past couple of years. Combine the payment shock associated with rising interest rates, and you have an outsized negative effect on the consumer sentiment. We had a 30-year bond auction today, which came in at 4.796 versus a 4.716 when issued. The bid to cover was 2.24 on a 2.37 refunding average. These are appalling stats even for the notoriously volatile 30-year bond auction. Investors are putting their foot down on the rally on long-term rates. Stocks retreated and Treasury yields climbed today after Jerome Powell threw cold water on Wall Street's dovish wagers by saying the Federal Reserve officials aren't fully convinced they have tightened enough. So there could be more tightening in play. The day began with nominal, inconsequential weakness in bonds. 10-year yields were barely up to yesterday morning's levels, and MBS were doing even better. Neither saw any drama in the first half of the day, but both tanked hard after an incredibly weak 30-year bond auction. Powell offered some hawkish reminders an hour later, but if that had any impact on long-term bonds, it was only to keep yields in the post-auction range. Short-term bonds definitely didn't like it. The auction and the resulting sell-off were significant enough to draw a fairly clear line under the recent trading range in Treasury yields for now. Market around 4.5% in 10 years. Barring surprises, this likely means the range is the range until Tuesday's CPI. The lower boundary is clear. The upper boundary has a few candidates to consider over the next few trading days. UMBS ended the day down 41 basis points at 100.39. Ginnies were down about the same amount, but 100.39. That's putting us right in this trend line, which is the newly emerging trend line bordered by the 100-day moving average and a Fibonacci line on the ceiling, and then the 50-day average on the bottom, which it bounced off of today. So we'll have to see what comes of next week. But we did get some industry news with UWM Holdings, the parent company of United Wholesale, reported better than expected earnings per share. Quarter 3 volume was 29.7 billion, which was down 7% compared to Q2 and 11% compared to a year ago. Gain on sale margins increased to 97 basis points compared to 88 in quarter 2. They are guiding for fourth quarter production to come in around 19 and 28 billion, with gain on sale margin at 75 to 100 basis points. In terms of things you can help, check out our sponsor at thatmakesense.com. We have another issue from The Slight Edge, which is all about finding a way to make your goals succeed. So this is all about, there's an old saying where how do you eat a elephant? One bite at a time. And the slight edge is basically just like that for all of your goals. But let's look at next week. Next week, we got a bunch of stuff coming. So federal budget is coming on Monday, which will give an indication to how much supply is coming, which has been a hot topic lately with so much debt being issued. Tuesday, we get the CPI, core CPI headline numbers, which will be a big mover. Then on Wednesday, we get the core PPI and retail sales. Jobless claims on Thursday, and that's pretty much it for the week. So it'll be a volatile week, so definitely take some time, get some rest, and thank a veteran. And then if you have some time over the weekend, check out our Common Core sources and sponsors, including our sponsor at thatmakesense.com.